Welcome. I am Eric with Muathe.com, and I greet you, beloveds, in the love light of the one infinite creator. So let's take a look at the Nifty for today and see what we can learn from its MACD movements. Now, I've been talking about MACDs over the last couple of days, so check out my most recent videos, and I've been discussing this topic of the MACD and how we can use it for swing trades. So let's begin from a different vantage point. Today, I'm going to look at this a different way. I'm going to draw a trend line here on the smaller setting MACD for the MACD, and here I'm using MACD setting of 5, 8, and 3, so it can give us earlier signals. Now, we can clearly see that there's a break of this trend line here. Now remember, all of these videos are brief and they're just introductions into different concepts. If you want more information, there'll be links in the description of the video. Lots of discussions about the MACD on my YouTube channel for free. So if you are interested, take a look at those videos. If you take a look here, we can see that if I extend this line, this blue line, we get some interesting information from it. So I'm going to extend that line. And the market is very good in understanding where it sits in terms of price action. So we break it here and we move lower. We come and tag the line there. We are rejected for this swing trade opportunity. Of course, this leads to that possibility. Again, here, you notice we get this resistance and we get a swing trade down. We clear this area here, and we have this swing trade opportunity up. We break it here. And of course, since that break, we can see that market's generally been sideways as far as the Nifty is concerned. Oh, by the way, this is the daily for the Nifty. Should have mentioned that. Now, that's one way to look at things. Take a look at where we've had uniform activity rejection at the 0 MACD line. So this is the 0 MACD line. Every time we have uniform activity, it tends to suggest that there's a reversal, and we got one there. Uniform activity rejection, it goes above 0, back below it with uniform action for this stop or short-term high. We get this pullback situation. Recently, we've had another touching of the 0 line. We were rejected for the high there. We touch a line again there for this high, and we can see market's been generally sideways to down since then. So the 0 line and whether we get uniform activity or not can also add color to your understanding of where momentum seems to be flowing. Now, if you're looking for an entry, let's say, would you use this recent seemingly crossover as your entry point? I mean, it's crossing over. And the MACD is generally used for crossover entries, right? Would you use it? Well, I'm not sure. I would say, from my vantage point, it would have to clear this area first. The MACD would have to move above where it failed previously or recently here. This area here, it would have to clear that line for there to be a good indication of an upward move. Now, to show this, let's take a look at the other MACD, which shows us a good example. And here I'm using the other MACD setting I use, similar to the default MACD setting. Here it is 20, 13, 21, and 8. All of these are so-called Fibonacci series numbers or sequence numbers. Now you'll notice, as an example, there is a crossover here in December, early December, which is this period. Now, you can see what happened. It's not a very good crossover. Remember, crossovers below 0. So this being the 0 line, generally speaking, as per my own understanding and research, crossovers below 0 don't tend to be very good indicators. They do work from time to time, but they are not the best. And crossovers when you're above 0 are not good bearish signals because they just don't work as effectively. We can take a look here. For example, there's a crossover, a bearish crossover right there. But you'll notice prices never really went down. In fact, we can see that generally speaking, it was a market that was trending higher. So the crossover here should not be seen as bullish since it's above zero. They tend to be unreliable. They can work from time to time, but not as much. Or at least not surprisingly that they don't work. Don't be surprised if they don't work. Now, you'd rather this break point here, where the RSI stopped going down. I would say that the break of that area right there is more reliable, and you can see that corresponds with this movement. Now, you do get a move back. Again, these things are not perfect. You do get this attempted move higher, but you'll notice it really never cleared that break zone. All right. And recently, we had a crossover as far back as December here. And I was talking about that. Not the best move higher, slight swing trade to the upside, but you'll notice prices almost immediately resolved lower. So I would say the better entry in this type of situation is you'd want to clear this zone first. This recent high, you'd want to clear it as a better entry point. Thinking of it this way, this is an attempted move higher, it fails. Next time it comes above that line, it's a more reliable entry, as per the way I understand the MACD. And you can see that gives you this opportunity for this swing trade higher. It's another way of saying that, again, for me, it would have to clear this. These lines here, where it stalled, where the MACD stalled recently. For example, the most recent one is here. The MACD would have to come back for the Nifty and clear this area for there to be a sign of a stronger recovery. Right now, it's not there. It's actually pointing down. Momentum is still to the downside. You can see another example here where you had a crossover here, April of 2021, which is this crossover period right there. And really, we don't get any upward move. In fact, we get a price move down. And what I'm saying is it's better to wait for it to clear that area. So it clears this top right there. And that is this movement here above this area, which happened to coincide with moving above the zero MACD line. That is a better reliable entry for a swing trade higher, because it is moving above where the MACD had previously stalled. So this entry corresponds with this entry somewhere there. And you can see that was a more reliable entry. So yes, as with anything else, it does need some study, but I'm giving you a little bit of an introduction, and you can either take a look at my other videos where I go into details, or you can further your own research and find out what you can understand from this MACD concept. And so it is. I am Eric with Muathe.com, and I leave you as I found you, in the love and in the light of the one Creator. Go forth rejoicing in the power and in the peace of the one Creator. Namaste. And for those of you who want my premium educational material, and if you trade the US market or cryptos and you're interested in my breakout alerts, consider taking a 30-day free trial to see whether the service is for you. If it's for you, good. If it's not, no harm, no foul. All is well. Sending you love and light. Mwah.